going to talk about loan calculations. So whether you are looking to get a car loan, you want a mortgage, you even want to maybe finance furniture from maybe like rooms to go or any of these pay plan type scenarios, and you want to do an actual full amount of how much these loans are going to cost you, we are going to take a look at all of the information that you need to have to calculate a loan. We're going to look at like car loans as an example. I'm going to look at a mortgage. So let's look at a car loan and the mortgage. These are amortized loans and with fixed payments. So an amortized loan with a fixed payment, what is that? Each payment covers the principal amount and the interest expense, which usually reduces the principal amount each month. And I use just a lot of words here that you may not know. So let's just kind of talk about this and break it down a little bit further. So your principal amount is how much money you actually need to go and ask a lender. Now the interest rate, this is the amount of money that is going to be charged to you to borrow that money. And it's usually expressed as a percentage. When you go to, let's say, get a car or a mortgage, you want to look around to different places. Some banks, whether it's a bank, it's a credit union, wherever, they may charge you different amounts. Now these interest rates are going to depend basically on the company, on the bank or the lender. It's also going to depend on your credit score. Okay, the number of payments. So this is the total number of payments to be paid. And you have to just be aware of what your term for your loan period is going to be. Now we are also going to look at the total payment amount for that item. And the total payment amount is going to include the principal payment plus your interest charges. So you need to know at the end of the day, how much am I actually going to pay for this car or this house? So I need to know how much the principal is and how much interest charges. And so I think this is very important so that you know this and you see this, because it will help you and motivate you to maybe put additional money down or not take out as much money. Okay, let's move on here to a car loan example. So I just came up with a scenario. Let's consider a 5-year car loan with monthly payments. The interest rate that you can find, the best one is 4%, and you need to borrow $22,000. So what is your monthly payment? So with this, we're going to break this down. Your number of payments, you've got 12 months in a year, and you are getting a 5-year car loan. So that's going to be 60 payments. Remember, the amortized loan with fixed payments, you're going to do 60 payments of equal amounts. The interest rate is 4%, and you are borrowing $22,000. So let's go here. I'm going to find this, have this online calculator. I use just Google. If you do Google and you do car loan calculator, it just comes up with a simple calculator here. So this is just what pops up. So you have this amount in these boxes to fill in. So I went ahead and did the 22,000. Your interest rate is 4.0. and maybe 4 1/4, 4 1/2, 3 3/4. Just type in your interest rate and your loan period. And so your monthly payment is going to be $405. So that's how much you can figure out, and you can see if that fits within your budget. Some people like to do a 6-year car loan, so that's 72 months. So that does drop your monthly payment to $344. So let's go back to our 60 months. You can see it's $405. Let's say you could only get a 5% interest rate. Okay, so that goes to $415. Doesn't sound like a lot, but that's okay. Let's see if you can get down to 3%. Okay, that's $395 a month. Okay, so let's go back to our original problem. We're going to type in the 4%. It's $405. Now let's say your grandmother or any long lost relative gave you some additional money, and you can decide, well, do I put it towards have a larger car loan payment amount? So let's see if we can reduce this amount, this loan amount of $22,000. Let's say somebody gave you $7,000. So now you've got $15,000 for your loan. that drops that down to $276. So that is a huge monthly difference. We went from $415 to $276. So it is important to know, if you do have as much cash, or try to save as much cash before you need your car, that is going to be the biggest determining factor here of what your monthly payment is going to be. Now, there's one thing to note on here. We talked about your total cost of the car loan, the total amount. So, and this calculator gives it to you. It's $24,310. So what that means is we're paying our principal amount of $22,000 back, but we are total amount paying to the to the banker or the lender is $24,310. So we just subtract the $22,000 out of this, and that means we are paying $2,310 to the bank or the lender as their fee to borrow the money to pay for this car. Let's go back here, and that's what we get, our car loan answer. So our monthly payment was $405. The total amount paid is $24,310, and our interest charges for the 5 years is $2,310. If you have any questions, feel free to reach out to me at smartandsassymoney.com. Thank you.